Hello traders, in this module we're going to be covering mindset, beliefs, and behavior of the trader. We're going to go over well-engineered ACB templates. We're going to answer some questions. We're going to differentiate closes and breakout that do not set up, and we're going to filter out some misunderstandings about different types of setups and how they can play out being session trades versus ACB templates. Now, some of those session trades may continue into the close of the day from Asia or London, but most importantly, focusing on the true ACB templates, the ones that are scalable, that are 3-session sideways coil. Now, just going back to a simple understanding that my objective is to only take the setups that are sideways coiled. The sideways coiled ACB templates are the ones that I've shown my son. They're not there to interpret a market because it's closed in breakout and try to trade it. If traders choose to take trades on instruments that close in breakout, the important part of this module is to differentiate session trade versus an ACB template, because there'll be markets that close in breakout and they may give a trade setup, but they're not the ACB template. And so traders are saying, oh, I get chopped up, or how do you tell if it's a trend trade? It can go either way. We're gonna dispel those misunderstandings, and I'm gonna really reinforce to traders to build your muscle memory. It's not a guessing game. It's mastering the templates to understand exactly what an ACB setup looks like, and to differentiate a garbage chart, and to not even be bothered trying to trade it just because it closes in breakout. So you have to use some common sense, and that's not meant as a negative. It's meant as, you're approaching this as a professional. So master the true understanding or the true setup of what an ACB is. And when you have a scalable opportunity, and differentiating that where there's no setup, it's a garbage chart, and also understanding when you just have a session trade. Now, just going back to the basic model, Wednesday close and breakout is the highest closing price of the month or week, or the lowest closing price of the month or week. Sideways coil into the session. Now, if you're trading Asia, okay, well, the Asian session could blow off and give a parabolic move, but it may come back in London, or it may come back in the US. Is it an ACB template? Are we way up high, and the likelihood of that coming back is low because it's the high of the month and we're in a large reversal setup? Or is it just in a weekly template and it could come back in the London or New York session? So understand the difference between a market that coils sideways for 3 entire sessions, Asia, London, New York, sideways, not making a high and making a low in a large range and trading back and forth and then saying it didn't work because I got chopped up. That's not a sideways coil. So we'll look at some different charts to dispel that misunderstanding. And just, I really want to say this again. Just because a market closes in breakout doesn't mean we just jump in and try to short it and put our EMAs all over the chart. You don't use the coil. You do not use the coil unless you have a setup. And that setup is a sideways coil, sideways price action movement, sideways price action movement in a narrow range into the session open. If it's 3 sessions, it will have gone sideways for the entire day, not ranging to an extreme on both sides and trading back and forth. That is not a coil. Entry, stop loss, break even, take profits. If you're inside of a coil, if you're inside of an EMA coil, it is impossible to get chopped up unless you have a garbage chart or there's no setup and you're just trying to use EMAs to get into the trade. So I'll repeat this and I'll write it right here. Do not use the coil unless you have a setup. Do not use the EMAs unless you have a setup. So what I'm finding is traders are saying what they're doing is they're putting the EMAs on their chart, and then they're trying to trade that, and then the template isn't set up as a well-engineered ACB or session trade template, and because of that, they're getting chopped up. And I'll say this again: you're looking for a well-engineered template. Go back and review the best of the best. The specific criteria: close and breakout, highest closing price of the week or month, lowest closing price of the week or month. The basic setup is a Wednesday close. And the reason why that is because Thursdays have the highest probability. We've talked about higher time frames. So the front side of a month, we can get a Tuesday or a Monday. coiling sideways at the extreme and giving us an ACB trade setup. Front side of the month, back side of the month. One of the other things that's being repeated is, how do you tell if it's a trend setup or a reversal trade setup? Well, number one, you cannot trade against a well-engineered coil either way. So you only have one choice you can choose from, and we're going to look at some examples of that. Number two, as I just said, front side of a month. If we're in the front side of the month, which is the first few weeks, we can be expanding a range. We've gone over higher time frames. A market can be trending. It can be reversing a previous month's trend. And we can have a sideways month where a market is just closed in breakout, and we're going to get a reversal. But if we're in a trending market where we've had a first green day or first red day at an extreme, go back and review the higher time frames, we may now have a market that's going to continue to expand the range, and you can only trade in the direction of the coil. So if you're trading London and there's no coil, but you're trying to get in because you trade London, be prepared to get chopped up. If it's a 3-session sideways coil into a US market, that market may not be going to the US. It may coil into the London session. So again, you only have one direction that you can trade if you have a coil. So repeating this, it is not a guessing game. It is not a guessing game. Well-engineered ACB setup template, but understand if it's a session trade setup versus an ACB US session sideways coil. If you have a sideways session coil that's an ACB setup in Asia or London, which we can get on Asian cross pairs or London cross pairs, those trade setups may also not come back, but we will have a sideways coil with our EMAs all lined up. Now this is a Monday, and I want to use this chart. We're looking at the pound yen. We have a couple things to point out here. Number one, obviously we had a close and breakout. It's the high of the month. It's also the 30th. This is the 30th of December. It's the end of the month. Okay, we're 2 days away from the end of the month. It's coiled sideways in a nice rectangular box. We've broken out again, high of the month. So we've made a breakout and a coil sideways into our US session open. No major red news on the schedule. And this is just the price action template. We've got lots of space underneath, but I want to paint the visual image of a perfectly well-engineered ACB template. Okay, sideways at the high of the month, coiling sideways into our session open. Now, when we look at our EMAs on the chart, we're heading into our US window. We have our coil, all EMAs lined up. Now, I want to ask this question because traders are saying this, well, it can go either way. How can this go either way? How can this go either way? You can only trade the reversal setup. That is the reversal ACB template. Close and breakout, highest closing price of the month, coiling sideways for 3 sessions, all EMAs lined up. This can only go one way. If you're saying it can go either way, you need to go back and review, start at the very first module and go back through everything. This is the ACB template. This can only go one way. You cannot get chopped up in here. Entry, stop loss, break even point, take profits. This can only go one way. I'll repeat that. If you're getting chopped up, or if you're thinking it can go either way, you're trying to get in here, you're trying to get in over here, you're not waiting for the template to set up. It's a 3-session setup. This is so important. This is so important. Remember the title of this module, Mindset, Behavior of the Trader. This is so important. This is what we're looking for, the 3-session coil. All EMAs lined up. We're going to have some subtle variations of this. This is only tradable in one direction. Now here's another example of a Wednesday close and breakout. Coiling sideways into our Asia session window. You can only trade this template short. Look at our EMAs. Sideways into the session. A session trade. Now, if traders hold on to this, understand you're trading in Asia, we can still see this market come back in the London window. London traders, you can only trade this in one direction. You can only trade this template in one direction. Now this is an example of where Asia gets the first leg. We have low-hanging fruit in the Europe-London window. We had news in the US window, which brings traders down low and they come back up inside, but you can only trade this in one direction. If you're trading this down here, that is not a trade setup. That is not a coil. That is not an ACB setup. Up here, with the understanding that we're in Asia, this could be an ACB trade, but they also have the potential to come back and stop you at a break even. The London session trader may hold on to this, but they could come back on major red news. They could spike up, whatever that may be. But until this market coils again, there is no setup in the US window for this trade. But I'm painting the picture that, understand, if you trade in Asia or London, that is not the same as the 3-session sideways ACB coil. Well, I got chopped up and it could have went either way. Well, I asked traders to send me the screenshots of the trades they took where they got chopped up, where it didn't work. And so I'm painting the picture again of where we have a Wednesday close and breakout, and how traders may have took session trades in London at the high of the day or highest closing price of the week, but we don't have a nice tightly sideways coil, and traders are putting their EMAs on these charts trying to trade it, saying, oh, I got chopped up or it didn't work. Now let's go back and look at the very first chart again. We have a close and breakout. We have a market that trades sideways, breaks out again at the highest closing price of the month and the high of the month, coiling sideways into our session open and preparing for an explosive move. Contrasting that with a market that's breaking out and trading and making higher highs and lower lows. That is not a tightly coiled market. It is not an ACB setup. You may, as I said, take a session trade at the high in your London window if that's your trade setup, but this is not an ACB setup. If you get a coil in Asia, this may be a session trade. If you get a coil in London, it may be a session trade. It could continue into the close of the day, but understand that you can lock in profits. Why you must be at break even once it breaks a level, but when you're in an earlier session, recognizing again that we now have a market that could continue to trend, but it's not the ACB sideways coil for an explosive move. This is a session where we take the trade, we either lock in the money, we scale in and lock in the money, or we are prepared to take some of the profits off, or we run the risk of potentially being stopped out in a winning trade. So either taking profits, adjusting the initial position to break even, or with a small position in the market with your original stop at the extreme. Same thing goes for London. And if you're in the US, the train has already left the station. If you're trading later, you can only trade if there is a coil. But that is not an ACB template where we have the 3-session coil preparing for a large scalable opportunity all in till close. Now, I want to encourage traders to go back and study the higher time frames again until you understand these levels. So traders have asked, can you break it down starting with the daily and everything? And it's all the same. The reason I'm using this chart is to paint the bigger picture of knowing when we have a new month starting, understanding that just because we have a market closing and breakout, that is not necessarily an ACB template. We start a new month, the market pumps up first. We have a close and breakout. It's a Monday. Tuesday closes as a first red day. That's also our highest closing price of the month. So we start our new month. The market has a down closing day in breakout, closing as the lowest closing price of the month on a Friday. New month, new timing cycle. We pump higher, closing and breakout outside of Thursday's high of day level, the initial high of the month. We have a first red day. We have a market that collapses in the London window on the Wednesday, closing in breakout. But notice that our closing price in breakout is inside of our highest closing price of the month and week, and inside the lowest closing price of the month. So differentiating again, a market that closes in breakout on a Wednesday at the beginning of a month, and we've just made a pump and dump template, this could be the first red day extreme in a new month. The important part of this module and this particular section is to understand the difference between an ACB template and a market that is now potentially trending and expanding the range week 1, week 2. So when a market closes in breakout, it doesn't mean that it's an ACB day just because it closes in breakout. Now we can have trend trades, session trend trades, and continuation trades, week 1, week 2, and that's the important part. But we're inside of the highest and lowest closing prices of the month. Even though the market's closed in breakout, we are not the lowest or highest closing price of the week. This is a market that is coming out of a first red day setup, and this is the type of opportunity we can carry forward into other sessions. As I said before, once we have our higher time frame thesis in place, beginning of a new month, week 1, week 2, we can see opportunities of the gift that keeps on giving, a market that has now potentially locked in the highest or lowest day of the month in a new month, new timing cycle. We can still have coiled session trades, but that is not the ACB template. Now, if it sets up as an ACB template and it's a hold to a close opportunity and it's a 3-session setup, that comes back to the original playbook opportunities. But we can use the coil in a well-engineered trade setup. What's important about this is that when we have markets closing in breakout, traders are trying to counter trend them all the time because it's at the lowest or highest closing price of the month. They're trying to catch the high or catch the low. Now, if we have a market closing in breakout and we're heading into the closing range of the week, we may potentially have a 3-session setup. Now, this happened to be a non-farm payrolls Friday. We have the market closing in breakout. It's the lowest closing price of the month and the week. Now, the reason why I'm walking through this is to reinforce to traders the higher time frame understanding, and also when we have a well-engineered template. We have a sideways market, nice coiled market, but it breaks down, lower low. We haven't broken a daily level, but we have a market that is potentially now put in our high of day in a market that has been trending week 1, week 2 from a first red day high of month from our beginning of our month, pumping back up into our non-firm payrolls and collapsing and coiling sideways. Now, I'm going to put the EMAs on here in a moment, but you can only trade in one direction. You can only trade in one direction. The market is pumping up, dumping, and coiling. We haven't exploded outside of the low of month level yet, but we have a market that has closed in breakout at the lowest closing price of the month and the week, obviously, coiling sideways, breaking down lower lows, and pumping up into non-farm payrolls. Now, once payrolls has been released, if traders are choosing to trade in this market after the explosive move down, that's the first bounce opportunity. And again, it's a very simple approach. Entry, stop loss above our consolidation, but you can only trade one way. You can only trade one way if this was a normal day. You can only trade one way. We're underneath of the EMAs and they're pumping and coiling. You can only trade in the short direction, in the trending market that's expanding the range on the front side of the month. So I'm walking through these to reinforce to traders, not just blindly guessing. If you're getting chopped up, you don't have a setup. And if you are trading in a market that has high impact major red news and waiting for the news to be released, we have our first bounce continuation. There's our sideways coil after the news. And then understanding we have a new 4-hour cycle starting on currencies at 9 a.m. Indexes, metals, and energies, that is 10 a.m., the 10 a.m. club. But on currencies, we roll over at 4:59 p.m. New York time. And so our 4-hour rollover is 9 a.m. We have our non-farm payrolls release, our consolidation and coil sideways for the first bounce continuation. We can only trade in the short direction. You don't get chopped up. It's an entry, a stop loss. Once it breaks through and closes outside of a level, going to break even, and then either holding till close or taking profits on a measured move range expansion, taking profits into that coil sideways into the close of the day. It's a Friday. We exit the market. I don't hold positions over the weekend. Now, as we follow that market down and we have our lowest closing price on a Thursday, closing in breakout, we have a market that starts to establish a range in Asia, expands that range in London, and painting again the picture for traders. Although the market's closed in breakout, it's the lowest closing price of the month and week, differentiating an ACB template from a template that's potentially setting up now for a session trade. It may close at the high of the day or at the extreme and it's not coming back, but I want to paint the picture from an all-in scalable ACB template versus a session trade. So that's where sizing comes in when we have the perfectly well-engineered ACB template and comparing that again with a market that closes in breakout at the highest closing price of the month and week on a Wednesday, heading into our Thursday session. And I want to show traders this chart. We're looking at the 7th of November, so front side of a new month in a market that's in breakout long. And this is where traders say, yeah, but it can go either way. No, actually, it can't go either way. We're in the long direction. This is not a reversal setup. We're coiling sideways, and the market's breaking higher. And we'll put our EMAs on here in a moment. And this is why it's so important for traders to stop and not try to just counter trend or catch a move, but think about what you're actually looking for. This is a very well-engineered template. It's coiling tightly sideways. It's not ranging and making a high and making a low. So if we go back and look at our pound yen chart, we're on the 17th day, so we're into almost the third week. It's a Friday. We're closed at the lowest closing price of the month, but we have a market that's established a range, a larger range. They've broken out and pulled back inside. They're dumping down into the session open to the low of the month level. That is not a tightly coiled market for an ACB template. This is a template setting up potentially for a reversal trade on a Friday, closing out the week at the lowest closing price of the month and the low of the month. Now, contrasting that with our continuation trend trade. So traders have said, well, it can go either way. No, it can't. You have to build your muscle memory and master the setups. And if you're not sure, if you're in a large ranging market, differentiating between an ACB opportunity and a market that's just establishing a range and a potential buy or sell session trade at the lowest or highest closing price and extreme of a month. Now, if we put our EMAs on here, recognize again, we have a coil, a nice tight coil, all time frames aligned. This isn't it can go either way. No, it can't. Timing of the indexes. They open at 9:30. Once this market's coiling and it's going higher, I'm getting in. I'm putting my stop loss in place as this market's now coiling to explode. This isn't it can go either way. Close and breakout, coiling sideways. All time frames are aligned. So think about what that means. We have our 4 hour, our 1 hour, our 30 minute, our 15 minute, our 5 minute coil now. This market's preparing now to explode. We're breaking higher. It's coiling into the open. No major red news on the calendar. It explodes. And we're on the front side of the month. Market that is now expanding the range and trending in a new month. Going back and comparing that to the pound yen in a market that's established a high, broken lower, high and low in Asia, broken out, broken lower, and dumping down into the lowest peak formation of the month. This is a reversal trade setup for a session trade. And as I mentioned, this may not come back, but recognize this is not a tightly coiled market. So you don't use your EMAs. I don't use my EMAs on any of this. We can use a smaller time frame EMA at 20 EMA as we show in the playbook. But this is a session reversal trade at the lowest closing price of the month and the lowest level of the month. So it's important for you to be able to go back and walk through and take different instruments and recognize when we're at the beginning of a new month and we're closing and breakout, whether we have opportunities for ACB trend trades or if they're just session trade opportunities. An example of the NASDAQ, week 1, week 2, week 3, but we have our lowest and highest closing prices of the month. As we follow that month across, we have high impact major red news, we have non-farm payrolls, we have CPI, we have FOMC within those 3-4 weeks of the month. But if you recognize where you're at in the monthly template, and when a market does close and breakout, remember the most important basic model is Wednesday closing and breakout, highest or lowest closing price of the month. And if you're inside, how those can give you insight into session trades, but not just every time there's a close and breakout trying to trade with EMAs, because you will get chopped up because it's not an ACB template. You may have a session trade, or you may have nothing at all, just an erratic, messy chart, which comes back to what I've said about my sons. They're only learning the one trade setup, the Wednesday closing and breakout, for a Thursday ACB trade setup. Regardless if it's a trend trade, so repeating that, no, this can't go either way. You can only go one way. You can only trade long in this setup. And for the same reason, you can only go short in this setup. You only have one direction that you can trade in. There's only one coil. We're at the highest closing price of the week. It's a new month. We're coiling sideways, and we're pumping back up into our high of day. Thesis is then that the high of the new month and new day in a new month is locked in. You can only go short in the coil. There is no, it can go either way. So you need to be able to differentiate a very tightly well-engineered ACB template versus just session trades or a messy chart and I'm trying to get a trade. Very important. This is an ACB 5-star all-in scalable hold till close trading setup. Entry, stop loss, break even, and take profits. The only way you can get chopped up is if you're trying to get in early. Market opens at 9:30, explodes up and pumps into the high of day, coiling. And even if traders were to take this and get in early, thesis is that that's the high of the month. But we wait for the pump and coil. There's no coil here. If we get in here, we're getting in early. 8:30 and 10 a.m. major red news. We wait for major red news to be released, position ourselves in the market, place our stop. If we're scaling in after the news, as this market's starting to accelerate, going to break even. Now, remember, when we're at the extreme, go back and watch the time frame video regarding higher time frames. When we are at the highest or lowest closing prices of the month, a new 4-hour rotation on indexes, metals, and energies begins at 10 a.m. We had 10 a.m. major red news. After the news is released, we're into a new 4-hour timing cycle. This market is coiling now and preparing for an explosive ACB trade opportunity. If we're scaling in, once we break this level, I'm done. But we still place our max stop loss at the extreme. And as these bars are collapsing, I would be bringing my stop loss down and managing this very tightly. Once it breaks through, you can see we can project the breakout level from the previous high of day as a break-even area. A break-even area so that we now have no risk in this trade and even a small profit locked in if it were to spike back, but then letting the trade play out. Zero emotion, zero thinking, zero stress, zero management. So when a market closes in breakout, is it a well-engineered 3-session coil for an ACB template, or is it a session trade? Get away from just trying to trade it and put your EMAs on there because it closed in breakout. You will do damage. The only time the EMAs are on the chart are when I have a 3-session well-engineered coil. Otherwise, it's going to be a session trade. The ACB template, this is the 5-star opportunity that I'm showing my sons. This is the only trade setup that they're going to learn from me. They're not learning to trade every session or anything else. The ACB close and breakout on a Wednesday as the highest or lowest closing price of the month or week, coiling sideways into a well-engineered template. If there's major red news, we wait for the news to be released, entry, stop loss, break even, and hold till close, or taking profits into that last hour of the day. some homework for you is to walk through your months and then recognize you can have markets that are trending that can give us signals for ACB setups. That could be trend trades or reversal trades, a well-engineered, tightly coiled market. Or we can have markets that just are in a trading range in a month on an index or a currency that's in a sideways range, but it still can give us a close and breakout on a Wednesday or any other day if you find a well-engineered template. But walk through your pairs and recognize the monthly cycle, highest and lowest closing prices of the month. We go week 3, the market trades higher. That means the highest close of the month is not in place yet because we've broken and closed higher. Continues to trade higher, and we get our Friday, Monday, Tuesday highest closing price of the month. Closing in breakout at the highest closing price of the month, we may have an opportunity for an ACB trade setup. This is a 15-minute chart, and Tuesday, so again, we just saw the highest closing price of the month in a market that breaks down and pumps back up into our highest closing price of the month and the high of the month into our US session. So recognizing the same pattern, the pump, the consolidation, the coil into our 9 a.m. hour, and the vertical collapse at the New York Open in an ACB trade setup opportunity. So very important to recognize the type of market that you're in, and also recognizing a well-engineered template on the day. A market that coils sideways, breaking down and pumping up and coiling at the high of the month, highest closing price, for the vertical collapse. Coiling sideways in a well-engineered template. Recognizing when we are at the lowest closing price or highest closing price, the days of the week. Is it a session trade? Can be a very well-engineered ACB opportunity, but it may only be a session trade as we're now possibly reversing, and we may now have trend trades following on the backside of the move heading into the last few weeks of a month. Understanding when we're at the extremes again, how that new 4-hour rotation, regardless if it's a session trade or if it's an ACB template, recognizing the difference between the two, positioning ourselves in the market, managing our risk, locking in profits, and walking away. Once we have that extreme locked in, we can have a first green day at the lowest closing price of the month, which helps us form our thesis now into our sessions for trend trades or possibly ACB opportunities if indeed they present in a nice, tightly coiled sideways market. And understanding that when we get an ACB setup opportunity and a coil in our EMAs, how it can't go either way. Master your craft. It can only go one way. You can only be on one side of the coil. It cannot go both ways. So it's important to master the understanding of the setup, being patient, being willing to sit on your hands. It's impossible to get chopped up unless traders are just randomly taking trades. When markets are breaking down and they pump up and close at the extreme, the highest closing price of the week, and they coil sideways. Again, recognizing a session all-in opportunity versus a well-engineered template in a tightly coiled ACB template. We can still have trades closing out the week that can be ACBs. Pump, highest closing price of the week, day 1, day 2, day 3, into the closing range of the week, lower weekly lows. So it's important when we walk through day to day, a new month, new timing cycle, recognizing that markets are going to be expanding the range. And when we have messy charts, if they're session trades or if they are at extremes in markets that close in breakout for ACB templates. Understanding the importance of timing and the 4-hour rotations when we are at extremes, when we're on the front side of a month, the back side of the month. Are we expanding the range? And do we have a well-engineered template on the day? When we have a new month, new timing cycle, avoiding high impact major red news, but understand how that can start to establish a bias in terms of where this market might be heading. Week 1, heading into a Thursday in a tightly coiled sideways market that is now potentially setting up for an ACB in a coiled market. Signal days, lowest closing prices of the week in breakout, and being patient. Wednesday, Thursday, Friday, recognizing again session trades that may not be coming back, but we're in the front side of a week, week 2, and a market that closes in breakout. There's no ACB template here. That's an inside day. No tightly coiled market, but we get a nice tight coiled market into our Friday, new 4-hour rotation, an explosive reversal from the lowest closing price of the week. The blue line is the lowest closing price of the month. The reason I'm walking through this is so that traders can recognize the difference of session trades versus ACB templates, and also distinguishing tightly coiled ACB templates versus session trades. So traders are trying to trade this as an ACB, but we're again on the week 3. We now potentially have the low of the month already locked in. We're making higher highs on a Monday. They're getting traders to short it into longs from Friday's session, but it's not an ACB template. That's our stop on a higher high, the dump and pump continuation, week 1, week 2, week 3, now making higher highs and higher lows on the backside of the month. Market continues to break higher. Traders are trying to sell the high in a market that's now breaking higher, regardless if there's a setup or not for a session trade or anything. I'm pointing out the picture that the market is making higher highs and higher lows. We get to week 3 and the highest closing price of the month, closing and breakout on a Friday. Again, a session trade. Now this may continue and go right to the close, but differentiating a nice tightly coiled market where our EMAs give us our coil. This is trading from extremes, and whether traders, if that's part of your plan or not, is a separate issue. We're just distinguishing and understanding the difference of when markets close in breakout, a tightly coiled, well-engineered ACB template versus session trades from extremes. And there will be opportunities when markets coil sideways and align with our EMAs, and how you can only trade on one side of the coil. There is no, it can go either way. So it's important to master that understanding and the skill set around recognizing when a market has set up in a nice tight coil. If you walk through different instruments from the beginning, the first day of the month, to the last day of the month, and understand week 1, week 2, week 3, this will help solidify your mastery of when a market closes and breakout on a Wednesday and is the highest price of the week, and how it can coil into an ACB opportunity when and if it presents. Being patient, allowing that market to set up into the session timing window, positioning ourselves in the market, entry, stop loss, a break-even level, and take profits. A nice, tightly coiled market is sideways into our session open. When we have our EMAs on this market, you can only trade in one direction. Now we walk through some subtle variations of this same pattern. Market closing and breakout, coiling sideways, 15-minute chart, but I just want to demonstrate some charts that showed up this week, the exact same charts, same subtle variations, but the same opportunities. Closing and breakout, a range that gets established, but a nice tight coil heading into our session window. Different day, same instrument. Major red news on the schedule, a big vertical candle breaking the low of day level on major red news, pumping back up into our timing window. 10 a.m. new 4-hour rotation and the vertical collapse. Similar on the NASDAQ, which we just looked at, close and breakout, a 15-minute chart, a coil sideways, first day of the trading month, an engulfment candle. You can only trade in the short direction. Copper yesterday, a very similar variation of this, closing and breakout, breaking higher and dumping down, breaking lows, pumping into our U.S. session open, breaking down a major red news, coiling, and the vertical collapse. You can only trade in the short direction and recognizing when a market may close and break out at the extreme, but there's no setup, there's no coil. So that's so important. Don't just try to get into a market. Like we just titled this section again, Mindset and Behavior of the Trader. It's not about just getting in somewhere and putting EMAs on the chart. This is not a tightly coiled market. Yes, traders may have shorted it at the high or caught the move or anything else, but I'm not interested in that. I'm looking for where the easy money is. So I'll close on this. How can I mess this up? How can I get chopped up in here? How can I screw this trade up? I can only go one way. That's the whole point of the ACB, a nice tightly coiled market, positioning myself, scaling in, managing my risk, going to break even, and locking in the profits. If it's not a nice, tightly coiled, well-engineered chart, I'm not trading it. It's as simple as that. Neither are my sons. So walk through your instruments and recognize these setups. Master the setups, and then know whether or not you may have a session trade and you may have an ACB template. And if it's an ACB template, keeping things as simple as possible. Entry, stop loss, break-even point, and walk away. Locking in profits towards the close of the day or down on a measured level, whatever the traders decide. But an ACB template is all about it ain't coming back. And the 3 session setups are the ones that have the highest potential of not coming back. We can have session trades that can go the entire day, from a first red day or a first green day or an extreme of a week, whatever that may be. But when we get the coil, those are the scalable opportunities that I'm looking for. A market that can give us a trade in Asia may go the entire day, and it might give us 200 pips. We saw that on the New Zealand cross pairs this week, on pound New Zealand, euro New Zealand. But I want to be in a market that's potentially about to explode for that day in that session and not come back. That's my approach. That's what I'm looking for. This is the easy money. You cannot get chopped up in here unless you're trying to just catch the move, get in early, get in late, chase the move, position yourself into the coil, place your stop there. When it breaks, if and when it breaks, going to break even, and then letting the trade play out. We'll see you in the next video, traders.